We're talking with Terrence Berman about whether the Fed is going to choose the correct lesser evil when it stares into the abyss. And so, Terrence, assuming they're staring there and they choose the Stay Puft Marshmallow Man of deflation rather than some other monster to symbolize inflation or hyperinflation, and so they allow deflation, and the stock market deflates down to 5,000 or something like that. But the GDP would obviously deflate as well. So we would be in a massive recession, much worse than 2008 as far as the size of the contraction in GDP. But of course, when the GDP contracts, we're in a recession, government revenue evaporates and the expenditures. So our budget deficits that are already, $700-800 billion, they can explode to $1.5-2 trillion a year. Meantime, companies are going bankrupt, banks are failing. How is the government going to deal with this situation, and how is the Fed going to stand there and just watch it all happen and do nothing?
Again, it's really just, first of all, I agree with you. If you add up the obligations of the federal government to the bondholders through Social Security, through Medicare and Medicaid and the other programs, they don't add up. And so the government, in some sense, has to default one way or the other. And as you noted, they could do that through actually defaulting, and that could be meaning to change the promises, or they could do it through some version of a purchasing power default where they meet the nominal obligations. Again, that's a little tricky because a lot of those obligations are going to go up with inflation as well. The trick I see with inflation is how do you get from where we are now with inflation just above zero to some much higher number? And I don't know, Peter, do you have a specific prediction yourself of a date and a process for getting to that higher number?
Well, I already think we have a much higher number for inflation. The government is just not accurately reporting it.
Okay.
So I think we have a lot of inflation.
Or something like that?
Well, I don't think we're going to get to that serious a level of inflation until foreigners stop supporting the dollar. I think that day is coming where the world recognizes that this dollar system is the source of its problems, and the world stops accumulating our dollars and just starts unloading what they hold in reserves. And then, the dollar really plunges and prices go through the roof. And, the government is going to have to make a decision. But, see, I think right now the Fed is going to err on free inflation. They're going to keep printing money. They're going to keep buying bonds, because I think that if we go to a real recession, and I think the bond market gets hit too. I think interest rates go up. And I think the government can't forget about the promises that have made to Social Security and Medicare. The government is not going to be able to pay its existing obligations. If we have a spike in interest rates and a recession simultaneously, all of a sudden I can see $2-3 trillion a year budget deficits. I mean, they're impossible to finance. Even, let alone the government trying to pay its maturing debt, because the debt matures. The whole debt matures. The $17 trillion matures over the next 4 or 5 years. And if the world wants their money back, how are we going to do it? I mean, in the next year, let's say $4 or $5 trillion worth of treasuries mature. What if the world wants that money back? At the same time, we've got a $3 trillion deficit to finance, and we have to pay off $5 trillion of maturing debt, and the Fed's not there to buy any of it. Because if what you're saying happens, the Fed can't monetize it.
Present world, because people are going to not get their promises fulfilled, and we have we have an example of it right in front of us of Japan. So housing prices went down by a factor of 2 between 1989 and a couple of years ago. Number of restaurant visits per person went down by more than a factor of 2. And, people feel very poor because interest rates are very low. So in the deflationary world, we sort of know what that looks like, which is Japan or a more extreme version of Japan, right? People are poor, the suicide rate is very high, it's hard to find jobs, et cetera. Now, in the inflationary world, if you could magically get there, you could wipe out all the debts. In the biblical terms, you have a jubilee where you wipe out all the debts. All the debts are gone. Any problem that come from debt goes away. The problem is, or at least the difficulty I have, is how do you get there? So if we went from whatever level you think inflation is now to 10% higher, let's say you think it's 5%, you think CPI or a GDP deflator is wrong, we go to 15%. So if we go to 15% inflation a year or two from now, then where are interest rates and where are mortgage rates? So I think the problem.
I think they're going up, and I'm not advocating.
That really we're going to engineer inflation. They should do it very quickly. Otherwise, you have all those problems that you said, which are housing prices go down if inflation goes up because interest rates go up dramatically, and all the debt service issues get worse, not better. So I think inflation
Terrence,
is how do you get from where we are now to where you would want to go? And I think given those,
I don't want to go.
Ultimately,
Terrence,
decide not to go down that path.
I don't want to go down the inflationary path. We've been going down this path for too long. I just think we're going to go down it because it's more politically expedient to continue to inflate than to address the problems and allow a healthy deflation that's long overdue to actually take place. So I don't think it's a panacea. I think the worst thing you can do is destroy your current country. And I would disagree that things have been as bad as you think in Japan. I think it's more of a demographic issue than anything else. But we know what happens with hyperinflation. We can look at Argentina. We can look right now at Zimbabwe. It doesn't produce good results. Look what happened to Weimar Republic, Germany. So that is what you get with hyperinflation. That is horrible. I mean, nobody can compare modern day Japan to what happened in Argentina or Germany and so inflation is far worse but. Unfortunately,
so why
think
is
that
it
in order
more politically expedient for the Fed to choose the worst option? Maybe they'll choose the better option.
Well, so far they've always chosen the wrong option when they've had two options. So I think they're going to keep on making the same mistake over and over again until they can't do it anymore. Until inflation is so bad, until we get a big drop in the bond market, until their QE backfires. Right? Until they've lost total control of the bond market, of the dollar, until basically all confidence in the Fed has been lost. Maybe then they'll do the right thing. But unfortunately, it's going to be too late. And the pain, as you say, that we've been avoiding is going to be agonizing. It's going to be excruciating for a lot of people. But, hey, Terrence, thanks for coming on the show. I appreciate your perspective. Hey, that's it for today. Again, Happy New Year to all my Jewish listeners. You've been listening to the Peter Schiff Show here on SchiffRadio.com, the gold standard in talk radio. Bye for now.